Alright, so guys, based on the answers provided, I'll go ahead and just do a top-down analysis on the Swiss franc as paired with the Japanese yen. So normally when I'm doing my um, technical analysis, I do what we call a top-down analysis. And when you speak of top-down analysis, what just basically means, it means you look at the trading or the charts from the daily, you drop to the 4 hour and 1 hour. I always like to do two time frames away from the time frame that I'm looking at. So for example, if I'm looking at 1 hour, I'd like to do an analysis for 4 hours in the daily. And if I'm and then also look for the two downer time frames just to get the perfect entry level. So you do 30 minutes and 15 minutes. If I'm looking at the daily, I'll do the monthly and the weekly, and also look at the 1 hour and 4 hour time frame. So for this particular purpose, because I am a swing trader, I'll do I like looking at my trades either from a 1 hour and 4 hour time frame, because one of the things is that if you're trading, trading is supposed to bring you financial stability, and trading is supposed to bring you some level of independence, some level of freedom. So if you're working an 8 to 5 job, trading is supposed to give you that free leverage that you can still make money, as make more money, even more than you're earning to work your 8 hour shift. Personally, I do spend how long do I spend? I spend between 3 hours. That's between end of London session to New York session. I love trading New York session, but also I'll be in the charts. As you have seen, most of the time when you guys, by the time you guys wake up, I've always dropped some analysis on the chart, is because there's also another team that I mentor. So at times I have to check on the charts during the during the Tokyo session. So by the time I'm dropping some source on the chart, it means I've already looked at the chart. But basically, I will never want to take more than 3 or 4 hours on the charts for a day. So that's basically means within 24 hours, I don't want to take more than 3 or 4 charts, because you're not supposed to be addicted to the charts. The, the charts are just supposed to give you a leeway to trade. But as I shared with you last year, that this year I'm doing trading full time. Trading is paying my bills and my everything. So let's get to the gist. So we'll look at the Swiss versus the Japanese yen. So if you take a look at it from the daily, this is what it shows. This I'm using directly charts from my charts. So I had put this as a trend line. It's always said in trading that the trend line is the trader's best friend. So from this trade line, using the daily time frame, what it just basically shows is that price always has reached the trend line and bounced back, came back and used the trend line and bounced back. So for me with trading, I like to use more than 3 or 4 strategies just to confirm my trades. And by doing this, it just basically means you win more trades and lose less. Look, literally, there's no best analysis in trading. No one can tell you that his or her analysis is 100% sure, because at times, as it's always joked, hii market sio mama ya mtu. The market decides when it does, and the big boy decides when they make a move. So, but at least having an analysis of the market will give you maybe 80 to 90% security on that you are not going to make hazard mistakes, because at times the market depends on the news. And for those who are still new in trading, when you're looking at these charts, we always look at what we are doing now is what we call the technical analysis. But we always have other factors that determine the forces of demand and supply, by forces of demand and supply. I think today in the morning I tried to explain about the bulls and the bears. The bulls and the bears are what determines the forces of demand and supply. They determine how the market will move. They determine whether the market will be bullish, or they'll determine whether the market will be bearish. It just depends on, for that particular pair that you're looking at, how many people are willing to buy and how many people are willing to sell. So if you have more sellers than buyers, then the market will be bearish, and if you have more buyers than sellers, then the market will be bullish. So at the end of the day, that's what we look at. I've also listed the indicators that I use. So for me, basically, I use smart money. If I use smart money, that's why you see I draw these lines, and most of the time when I draw these lines, it's either I've drawn the line because that is an area that has been used as a support and resistance level, or it is an area that has double tops or double bottoms. So like here, you see it's almost an area that has had double tops and double tops. And here we have it's the same area that has had double bottoms, and it's still the same area that price has respected that area before. Either price has used that area as a resistance level, or price has used it as a support level. So here it has used it as a support level, here it has used it at a point of resistance. So when you're looking at the market, you like to look at that particular area because that's where either buyers or sellers will make a big move. And then my other indicator that I use 20 or 50 EMA. The 20 EMA is the fast moving line, which just basically means it puts together the last 20 days of the trade. Some other look at it as the last 20 trades, and the 50 EMA just basically means you're looking at the last 50 days. So it compounds that those trades and gives you an average of the last 20 or 50 trades that have passed. And then I use the trend line. So basically, if you're looking at this, it means I've combined three strategies. There's also another strategy that I love so much. It's called the Fibonacci Retracement. So what that basically means is, for example, if price was moving from here to here, let me just redo it. So you do it the opposite. So if price was moving from here to here, it basically shows that this shows how price will reverse, and if here was 100% and here was 0%, when price will reverse, it will still show the same way. And normally we use our 61.8 level. We call it the golden level because this is where price reverses. And if you look at it critically here, price reached at this level and then it's reversing now, and it will come back to 50 level and then go back. That's how price moves. So for me, these are a few indicators that I use in the market when looking at the market. So I'll just do a quickly top-down analysis. So from the daily, we are seeing that this market is basically on an uptrend. So by meaning an uptrend, it means it will hit the trend line, it will go back, it will come back here, go back, drop, hit the trend line, and more likely it will go back. If it doesn't go back, then it takes something specific, whether it's news or something else, for price to break structure. And when it breaks structure, what it just basically means that price will come up to here, retest, and then continue dropping down. So for us as traders, it gives us an anticipation. So for me, if I'm looking at this trend line, and let's say we have one other candle here, another candle, because you're looking at the daily. So basically, I'll try to look at price will hit the trend line around this area. So if I'm looking at a sell or buy, then it means I have to anticipate price either to misbehave around this region. So that's basically it. So for me, if I'm looking at this trade, there are two places that are very important to me. First of all, this is a very important level to me. So if I'm looking at this level, this is an area that I'll personally like to look at it and mark it up. So I'll mark this one here, as my take profit level if I was going to look at this trade for a buy. And then another level that I will also critically look at it, I like to look at it at this level, which I've already marked it as another level for me to take profits. If I was going to do a sell, I'll look at this double bottom, and this area has been respected before, so I'll look at taking profits at this level. I'll also look at another level here, which I've already marked it on the daily. Then if I drop down, if I drop down on the 4-hour time frame, it still shows the same. The only difference is if you drop down, it just gives you that clarity. So you can see our level here, and then another clarity of another level that we would have missed on the daily. On a 4-hour time frame, it shows you this place here. Yeah, so let me try to mark it. So I'll mark that region as there. Sorry, I'll mark that region as there. So if I was looking at it to enter into a trade, basically already this price is ranging. I can know I'll enter a sell and get out from this level, and from this level I can enter a buy up to this level and get out from there. Then if you break this down more, you'll drop it down to 1-hour time frame, and let's have a look at how the market looks on a 1-hour time frame, which is just basically the same thing. Is trying to confirm what we have seen on a 4-hour time frame, that the market has been raging up to here, it comes back, goes back up to here, and then it still goes back. But if you are using another strategy, which is a 50-20 EMA, it means every moment the 20 EMA crosses the 50 EMA, we can get into a sell. So if you get into a sell at 20 EMA, you just respect the 20 EMA, and you respect the price until when the price crosses back. So for example, if a person got here using the 1-hour time frame as his trading time frame, he would have gotten into a sell from here, hold this trade all the way, until when price dropped back from the 1-hour time frame, and I will have gotten out of the trade from this place. But if you can gauge how many pips this person will have gained, if you gauge the number of pips this person will have gained, let's say from here up to there, that comes up to around 64 pips. So we have gained all these 64 pips, and at times in trading, that's why I don't answer people every time they ask me how much do you make in a day. It depends with what is your lot size. If you are trading with the 0.01 and you have gone 60 pips, just basically means you'll be making maybe around $0.6. And if you're trading with the 0.1 lot size, will make maybe around $60. And if you're trading with the standard size, which is 1.0, you'll be getting around $600. And if you're trading with a 10.0 lot size, you'll be making around 6,000. So at the end of the day, it just depends. And for us as traders, we don't look at how much we make, we look at what is the percentage that we make per day. And that's why I was insisting on people having like trading plans, because from your trading plans, it shows how much you want to make in a day. For me, when I started trading, I always started with 5% every day, and I've grown in leaps and bounds up to what I look at today as how much I want to make in the market for a day. So I think for me, that will be the analysis for today. And as we are going into the New York session, basically it just means that price is almost dropping up to here. You have to follow price action, what it says. So literally, already the 20 EMA has crossed the 50 EMA. So basically, price will come back up to this level and revert back. But as I've always mentioned, personally, I will not like to trade such. If I was to enter such a trade, I'll wait, because what price is doing is just that price is consolidating. Maybe next time when you have this call, we'll sit on it and then watch what it means by price consolidation. In other words, we call it price ranging. So basically what it means is price is just going from point A to point B and back and back. So for me, I'll stay out of this trade. It's not viable for me to trade. It does not mean anything unless price goes below this point or price goes above this point. Then I'll be looking for buying opportunities. Or if it goes below this point, then I'll be looking for selling opportunities. But at the moment, this is just, I call it kelele. There's nothing much from this market, so I'll avoid it as much as I can. So thank you. That's a long video, 15 points, 15 minutes. I've explained a few things. I've explained my strategy. I've explained everything. So good luck for you guys in the market in New York session. This is the pair that you guys picked up for analysis, and I think I've done my best. Thank you guys.